All right, traders, George here, and time to talk about equities and the futures here. We've had a real intense sell-off in the equity futures as well as the equity markets and individual stocks over the last 2 weeks or so, really accelerating last week. And what I've always said is that you want to look for breakdown levels to gauge where a trend might be weakening. So for the multi-year bull trend that we're on in the NASDAQ and the S&P, here's the NASDAQ, and one of the breakdown levels that I mentioned was obviously up here at the top. There's a lot of trading commitment up here, which is impressive when the bulls go on to make a new structure high. But if they break back below that level, then they're trading below a lot of recent trading commitment, and that puts more pressure on price to recover that area. Well, they had a pretty sharp sell-off there, but a really strong recovery here, and a second one over here as well. So while they drove down to retrace this bullish impulse, they were finding some bullish recoveries of this level here at about 39.80s. This is still in line with this breakdown trade here because they were never able to break it back over this floor here, which was a trigger to be short or to move away from being long, however you want to look at it and use this information. But the continuation for price to move below this area also had some good follow through once, twice. The third time we really started to accelerate down more, and this third target area here, we bounced off of it, but then we had a sharp sell-off through it. And then Sunday night now we're getting an acceleration or a little bit of a pile-on in a thinner market condition here where we're driving down further. So the three red flags have been breached for the NASDAQ here. They've broken down from here, here, and here, and really they're looking to move down to about 37.90s to this spike here. That's the next key spike below. If you look to the left, there's a bit of structure support here, and this balance beam actually starts to grow more in prominence as we move up here. So we could see this be about the extremity of the selling, and then some short covering and some new longs coming in to bid this thing back up. This is a fair-sized balance beam here. It's one of the two most significant ones here. And if the bulls get priced back over about 38.90, that would be impressive to see them trade over that and very likely lead to a pretty big pop back up to this area here. But as far as this breakdown goes, this took what was a pretty good sell-off here and turned it into a nice bounce and then really introduced some volatility that we haven't seen in a long time in the market. So the market speed's gone up, the range has gone up, the average true range is higher in all the markets, and now we're seeing, even after hours, some substantial futures selling here, even after a big down day, at least 2 days in a row now, Sunday evening here. So that's putting a lot of pressure on the market now to reverse that if it's going to. This next level here is the next key target below for the NASDAQ, 37.90s, and then I would watch for a passage back over 38.90 for price to show that it's got maybe a bigger bounce in store than just an outside return and checking this as resistance. Since I've got the NASDAQ here, let me show you the daily chart. Got to also do this for the S&P here in a minute. So breaking down here, we're below this key spike, we're through this air pocket, and we're trading below this spike here. That suggests a trip down here, lower, and where are we going to put the brakes on? We've really exceeded a typical sell length here, and a bounce is very overdue, but technically it's possible to not see that bounce and drive down further into the 3700s and a little bit lower than that into this area here. So that's what's in store for the NASDAQ. It's got a big challenge ahead of it to stop this selling here. It's got to go up over 100 points just to cross-check this last bounce beam here to show maybe a more solid bull bounce. And if it really shows more weakness, it could literally double the sell impulse that it's made already and continue down to the 3650s to the low 3600s to drive into this zone here and find a larger scale support area. So all of that's underway. You can see how easily it made it down to the third target here. It had a lot of volatility associated with it that affected traders on both sides, long and short. So that's something to be cautious of. And let me show you the same situation here for the S&P. I just want to give you a global overview of what's going on with the markets here so you can understand. Here's the NASDAQ, here's the S&P down at 1886s now, Sunday evening. 1880 to 1830 is this next balance beam here. So we're already driving into the ceiling of this zone here, testing that as support. That's something to watch. Maybe the S&P is going to be the one to stem the bleeding here. If we can find support at 1880, then it's a trip back through this air pocket, looking for resistance here at 1920s or so. That's the first order of business there. That's what the daily looks like. So you can tell that we've abandoned this area here. We've broken down through these areas, and now we've filled through this air pocket right to this ceiling. Great area for the bulls to come in and show a little support here. And then let me give you the more drilled down version here. So this last impulse here, looking at this as a bullish impulse to new structure highs and yet another new structure high. Fair bit of trading commitment here, a lot more here. This is one of the red flags I mentioned, was to watch price trading below 1965. Not a big deal if it breaks below that, but something to be aware of. Below that, sending it down to 55 to 43. So below 43 is the second red flag here for the S&P. And then as a retrace goes of this bullish impulse, when we made our first trip down to the 786, we found a great bounce there. And we even found some good action a second time through what was building as a more substantial zone here, 1922s to 27s. This last go here on Friday, we're easily popping below that level and getting below the 786, high probability of retesting the inception of this bullish impulse. And there, Sunday evening, we are at that point right now, 1886s. So looking back over the last 120 days, the trading commitment tapers off a fair bit as we move down here. That's putting a lot of pressure on the bulls to come in and do something new to create a level of support. Visually, we have the support swing here at 1890, and we're trading below that right now. So a few points lower, we've already hit that zone and bounced up. This is something to watch. Maybe we have a bit more of a head fake into the morning tomorrow and recover a little bit in the afternoon, and then give the bulls a chance to recover here a bit, maybe some larger scale short covering as well. And then a new battle will be on to find out where resistance comes in on the next move up, or if we drive down even lower and attempt to find another area of support. 1880 to 1830 is the area to watch below where we are right now. So that's what's setting up with the S&P. Just wanted to show you the follow through that we talked about in the live room, and we'll be on top of this all week. That'll do it for your update, and I will see you guys back in the live room.